I'm bringing you another episode in the series of how to trade intraday charts bar by bar. So, if you look at the market, we're going to be discussing the market action on the last working day, which was, let's go to the daily time frame, on the 10th of May, right? So, today is the 12th of May, so we're discussing the action on 10th of May. And just have a general look. You had a bearish candle, and then you have a bullish harami here. Market is not done much, 97 points up, but it's a bullish harami. Now, having seen that, the market was up in the morning, so let's go and look at some action. And I had added a few stocks here, basically stocks that were long on that particular day based on my scanner. So we'll be going through that. Let me add the session here so that it's clear. Now, if you see here, the last candle has closed at 194.80 and we are opening at a 20 paisa gap up. Okay. And we are on the 5-minute candle, and I've kept the ATR indicator just to get an idea on what's the volatility. So if you see here, this price is basically it's bang in the middle of the EMAs, and nothing doing here. We are just going to be watching because too soon there's going to be a lot of market volatility when the market starts, and this is not for this particular day, but for every day. So it's best to watch the market to see a clear direction before entering the market. Otherwise, you're just going to be gambling and losing your money. We are here on the 5-minute candle, and so we have 1.8% initial exuberance. Then in the next candle, we again, if you see here, 196.90. Again, we have a gap up here, and then we have an exhaustion gap up again, followed by a bearish candle. So there is, since it's quite early in the morning, you shouldn't be taking an entry here. Now, if you see here, this candle size is quite small compared to the earlier candle. It's also a gap, and also if you see here, the volume bar is also lower than that. And then as a consequence, again, if you had taken a long above the high of this candle, you would have been immediately taken out. In fact, it's taken out two candles prior to this, and you have a real bearish engulfing candle here. Again, if you took a stop, if you took a short here below the low of this candle, you would have made some money. But I wouldn't advise it because these EMAs would serve as dynamic resistance and the price can easily bounce off. There's no clear direction here. Anyway, there's a bearish candle here. And then if you are happy that this candle, there are two bearish candles in a row, and we are below the EMAs, and many people would have taken a short here. And if you see here, the next candle, people have shorted and then it's gone back up. The bulls have taken you out. Not only this, it's taken the two prior candles as well. And if you had a stop above the high of this candle, you're already out of the market. And then again, bears try to do the same, but there's dynamic resistance here in the form of the EMA 50. So we have a bull candle here. Again, nothing doing here because it's a real jumble here, and there is no clear direction whatsoever. So you look at this candle, and then this candle closes 199.10, and the candles opened again 199.10, and it barely closes 20 paisa above, and immediately you have a bearish candle. So there's a continuous tussle going here, and you have three inside bars here, followed by a bullish bar here. And if you look at the volume here, the volume is slightly above the 20. So you could have taken a long above this, but only for a scalp, and your stop loss would be below the low of this candle. And the low of this candle is 198.75. So if you kept it 198.50, you would have gotten taken out. You would not have been taken out even here, and you would still be in the trade if you took, if you basically took a long above this and kept it here, 198.75 and 198.85. So you would have been safe here. Let me zoom in so that we get a better idea. Yeah, 198.75 and 198.85. So you would still be in the trade, and you would have made some money, and you would have probably sold as soon as the price was approaching 20, and you would have been out of the trade, because this would act as dynamic resistance, but it has not in this case, and the price has gone up. And if you see here, the price has been below 200 EMA, so this is nothing but a false breakout. And people who went long above here and kept the stop loss here, they had the stop losses taken out. And then again, you have your shorts here, where price is uh, coming down here. And then could you have taken a stop, a short here below the low and the high above? You could have, and you could have made some money, but it's not advisable because the price can easily bounce off here. And if you see here, there's not much price action going on. Again, 200 EMA, very difficult for 200 EMA to be broken. Price has gone up, it's come down again for a bit, and then slowly but steadily. Can you see this candle? This candle with huge, humongous volumes, more than 10 to 12 times, 13 times, and 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 just 0.37. Why? Because it tried to you have your 20290, the high, and the high is touching the EMA, which is currently 20290, but still you managed to close almost at the high, just 10 paisa below. So the next candle is opened up here, and if you had taken a long here with a low below this candle, you would have made some money and you would still be in the trade. But taking a long above this candle is kind of risky proposition, because the first breakout failed, and chances of this failing are again very high. So I would not suggest taking a long here, but wait and watch. And you see a lot of dojis here, selling pressure here, and then again prices come down here. And if you see here, you have a nice candle here, and the percentage is high, but the volume is kind of low. So nothing much to do here. And then you have a retracement back to the EMA. Now this is a proper place where you can take an entry. And if you had taken an entry, if you had taken an entry above the high here, and your stop loss below the 9 EMA, you would have made some money. And then obviously you would have gotten out before 320. Otherwise, the broker will cut your order. So this is one chart that we've seen. Let's look at another chart, time techno. Now time techno again. Let's see time techno 252.10, and you opened at gap up, but it's a red candle because it opened at 256 and closed 60 paisa below. But still you made some, but you have got a 1.31% gain, but it's red because the close is lesser than the open. And again, entry time, so nothing doing. Can you see here? The bears tried to bring it, the bulls went up, the bears went down again, and then you have again bulls going up. The same thing that happened in other stock. So what happens basically is that what is happening in the Nifty 50 will probably be replicated in other stocks as well. By and large, some stocks are going to be like rock stars, and they'll do their own thing. Nifty is going down and they'll keep going up, and then some stocks will keep going down even. And if the Nifty is going up, some stocks will say, no, we will not follow the Nifty. We are going to go down today. And they'll go down either because of a particular news, some impact, or some other thing where they're just going to do their own thing. But by and large, your Nifty 50 and your Nifty 500, most of the stocks will follow the trend. So as I said, nothing doing in the first 15-20 minutes. Just wait and watch what's happening, because there's always pre-market orders and pre-market and after-market orders which are going to be executing here, especially in the first 5 minutes. And then there is a lot of tussle going on to find out who's the king of the day. And so just wait and watch. Nothing doing here. You see here, anybody taking a long here would have been taken out. And then if somebody had placed a short here and below the low of this candle, they would have definitely made some money, but it would be risky and not advisable because it's in the middle of the EMAs. And if they didn't sell here because they were greedy, they would have gotten taken out here in this candle because it has gone above the high. As it is, if you see here the stop loss, where are you going to place your stop loss? If you do it here, if you shorted here and you kept it here, you would have gotten taken out here. And some people who went short below this would have definitely gotten taken out because they would have kept the stop losses somewhere here. You can't keep your stop loss on such a big candle. Can you see at 655? That's almost three times, 2.5 times the ATR. You're not going to get 1:1. Forget 1:1. You're not even going to get 30% of one ATR because the movements are small and the swings take place. So you're basically essentially looking for scalps here. And so if you see here, price has gone up, but the volume is sparse. And then you have something like an evening star. Always a bullish candle, but it's like an evening star, and back you come back to the EMA. And as soon as you come back, you again have another candle that's taking you. So if you took a short here again, your shorts are out. And you come here again, nothing doing here, although the volume is good here. If you see the volume here, the volume is good. If you decide to take an entry above this and you kept your stop loss here, you would have made some money. You would have probably sold out here. But still there, if you see here, there's rally based rally, and then again you have an evening star and price is broken through. There's not much going on here, and most people who would be intraday trading, even if they were scalping, would have, most of them, if they took multiple trades, would have had their stop losses taken out because there's no clear direction. It's going up, down, up, down, up, down, here. What are you going to do here? Let me take one more stock. Let's go with VGuard. Now, if you see here, VGuard 342.55 is the last close, and you open gap up, you cross the VWAP, and then again you come back into VWAP. And if you're and then you have this nice candle with volume above the 20. If you're taken a long above this, you would have been taken out here. And if you take a short above this again, if you took a short below the low of this candle, you would have been taken out again, because if you see here, so nothing much happening here. And I think at least for the stocks that I'm showing you, was a terrible day for intraday traders. Let's look at Jind World. Again, if you see, same pattern, a little gap up, down, and then this. What are you going to do here? No, let's say you do something like this. You see that there is resistance. You do something like this, and then you do something like this. Now there is a 4-5 rupee gap, sure, and you can go long here at the support here and go short here. But if you see, the EM is bang in the middle, so it does make sense. Just for the heck of it, I don't want to tell you. You could have taken always buy at the support and sell at the resistance. Sounds very nice, but this chart is already done. When I am talking here, I'm talking only up to this candle. I don't know what's going to happen here. When I'm talking here, so this line only came at 215. The proper line would have come here, and this line would be there. So if you were here and you could have taken part here with a limit order, but your target would be somewhere at the 9 EMA. So it would only be a scalp, and yes, you can definitely do that, but not much action. And again, this is very, very risky. It's like gambling. Let's look at one more. Well Enterprises. Ah, here again, you have this stock going up, coming down, going up, coming down. Now, can you take an entry here? You can, but you're below the 200 EMA. Should you really buy or go long when you're above the 200 EMA? Sure, you can. You can basically uh, in a short term, but it's not advisable because the market is generally, the trend clearly shows, if you see here, the trend is definitely down. So how can you go long when the trend is down? Once you go above 200 EMA, yes, now you can start of thinking going long. And here, when you're below the 200 EMA, and especially in between these EMAs, you can't do much because there is an EMA at every few paisa, very short distance. And what you can definitely do is try to short here, but how much will you short? For example, I'm zooming here. If you see here, buyers tried, but sellers bought it down. You got a short here, but how much would you have got? 5 paisa? Here it appears you got 90, but this is like, would you have waited till the end of the candle? So there's nothing much going on here. And once it goes above the EMA, you can go for longs. But again, if you see here, see the volume. Volume is very sparse here, and the price is going up and down. And finally, there is a huge candle that's come below. Again, I wouldn't advise a short here because you have the so many EMAs here. And it's gone up. Nothing doing here. I think it would have been a terrible day for intraday, and that's how some days are. You really can't take much trades. Even scalping is very difficult, and you end up losing money. It depends on the stock you are in, but if most stocks were like this, it was very difficult to make money. So I hope you had a good learning. And if you really like what I'm teaching you, then please subscribe to my channel, hit the bell icon so that you're notified of any new videos. And happy trading, and I'll see you in the next.